I hope nobody's bored by the carbon markets yet, because we've got a lot more to tell you about the carbon markets. So I'm Dana, I'm the CEO of Flow Carbon, and I'm joined by some phenomenal panelists. And here, what's really exciting is that these panelists represent some of the leading companies innovating in the intersection of the carbon markets and Web3. At the project level specifically, which is really exciting. So we're now on the supply side of the market, where you actually go, you zoom in on the ground to incredibly impactful projects that are reducing or removing greenhouse gases from the atmosphere and are doing these activities in a manner that's quantifiable and measurable, and thus are able to have carbon credits issued to them, which they can then sell into the market. So we're going to hear about 3 different types of projects, 3 different projects that are innovating in how projects are done, quantified, and issued. Now, you've heard a tremendous amount about the carbon markets today. So if nothing else, you're all like significantly smarter in a very exciting topic. So congratulations. Now, what I want to do before we zoom really sort of in on the ground is to zoom out for a minute and just give you some kind of interesting stats about the voluntary carbon market so that you can contextualize it within other markets and kind of start to understand why it's so special, why it was the focus of an entire summit today, why there's a lot of talk of carbon markets and Web3 in DC, at a lot of the regulatory bodies, all over the place. So what I'm going to start with is the market itself, some stats about the market. I said earlier, this was a $500 million market in 2020. It was a $2 billion market in 2022, so it's pretty significant growth. And it's expected to experience something like 15x growth by 2030. So some of the projections have it as between a 50 to 100 billion. I've actually seen $180 billion market by 2030, which is just around the corner. So it's a really rare event to see a market for an asset, some would call it a commodity, accelerate and expand and grow that quickly. So from a purely financial and markets perspective, super fascinating. From an impact standpoint, I think you could all probably speak to the impact, but some of the interesting stats are as follows. This market can contribute up to 30% of the overall solution to climate change, because the projects that can be financed via this mechanism of carbon credits can contribute between 30 and 37% of the overall impact that we need to see. So again, from an impact standpoint, from a climate mitigation standpoint, hugely important market. And then lastly, from the lens of Web3, this is a hugely important market simply because, coincidentally, the challenges that are inherent in this market and that have prevented it from scaling are exactly the right sets of challenges that blockchain technology can address. So it happens to be a phenomenal use case for Web3, which means that it is getting a lot of traction and momentum in the off-chain world to develop blockchain-based solutions for this market. So whereas the earliest experiences that many people had with blockchain came in the form of cryptocurrencies, the carbon markets represent a new complete wave of use cases for blockchain that's getting a lot of momentum. So with that, I'd love to introduce our panelists so they can talk about how they are they are building really interesting and important companies in this macro environment that is a hugely exciting environment. So I'll start with Sam. Sam, Carbon Path had a huge week. Can you tell us about it?
Yeah, it's on. Great. Yeah, thanks. Really appreciate the time and the effort here today. We actually did launch our token, so you today can actually go and buy a Carbon Path token and fund the shutting down of a well. So it's impact that can occur right now. And that's the one thing that we really wanted to focus on is industrial solutions. Industrial solutions are large, they're scalable, and they're actually a pretty low cost. So instead of allowing somebody to pollute here and then paying $1,000 to try to pick it out of the air over here, or trying to rebuild a forest, 1,000 miles away, we're trying to stop the source of pollution at the source. Why oil and gas wells? Well, it's a huge problem that nobody really knows exists. A lot of people have heard about orphaned and abandoned wells, and they know that's an issue. There's about 2 million of those within the country. But out of the 1 million wells that we actually get production from, 750,000 of those are what we call marginal producers. They only represent 5% of total production, but they're the primary source of fugitive methane emissions for the whole world. So if you can just shut down those wells, you don't have a whole lot of impact on the oil market, which is a regressive tax, but you can effectuate real reductions in methane. And when you think about that as 80 times more greenhouse gas potent, you can have tremendous impact right now. That's it.
Awesome, thank you. Luis, Moss is really a pioneer at the intersection of the carbon markets and Web3. And I know you're using technology and have always used technology to increase the accuracy of carbon measurements in Brazilian forestry projects. Can you tell everyone about that?
Yes, thank you, everybody. I'm very happy to be here. Moss was created in 2020 and in very little time was able to create some important tools. One that I like to mention is the tokenization, the distribution side of the business, to allow the possibility of individuals everywhere easily acquire tokens that are equal to 1 ton of carbon avoided, emission of carbon avoided. And we're using that very well. For instance, in the largest airline in Brazil, I bought a flight the other day, and in the end, I was able to compensate immediately that flight. And that's through the blockchain because we can retire immediately and not later in a later date. So that was interesting, and we plan to do that in other areas such as gas distribution, electricity distribution. So that's the distribution side of the business. And at the same time, we had to work in the origination side of the business because we see that that's an enormous bottleneck. We're in the country that in Brazil, that some people call the Saudi Arabia of carbon credits because the Amazon jungle has approximately 40% of the forests in the world and approximately 50% of the carbon credit potential. So we want to be focused there. And what we do is avoiding deforestation. And to avoid deforestation, you need to approach landowners and convince them to, instead of buying an hectare of land, of forest for $100 and then burning it and selling it the next day for 5 times the price to the agro and cattle creation businesses, to instead keep the land, work with us in those projects and receive $100 per year. So it's like a 100% yield, annual yield for 30 years. It's one of the best investments we know. But the thing is, it's very difficult to approve a project. The Amazon is about 50% from the state, which obviously, we won't work with the state at this moment. Then the other 50% is private. 25% large landowners, 25% small landowners. Like 10,000 hectares is a large land. So at this point, with the current technology, we can only work with the big guys because it's not commercially viable yet to work with the small guys. So what we want is using technology to be able to work in 50% of the Amazon. And for you to have an idea of how important this is, Brazil is like the 8th economy in the world. And can you imagine 200 million people using cars, trucks, ships, but still more than half of the emissions come from burning of the forests and cutting of the forests. So it's a very important area for us, and we want to make it scalable, and we want to really build a corridor of like a green wall, protecting the middle of the forest from the pressure coming from the south.
Right. I'll just echo. That's the key point underpinning the entire innovation of the carbon markets, which is you can buy a hectare of land in the Brazilian rainforest and slash and burn it, and all of a sudden its value goes up. That is exactly the economic incentive structure that the carbon markets are trying to invert. So really important point. Fred, OFP is doing an amazing job at reimagining the origination and credit issuance process. Can you tell everybody about that?
Yes, so I won't be too long because we had a few people here already. So we're providing the tech to people on the ground that are, in this case, complementary to what Luis is doing. Those people are reforesting, doing agroforestry, so we're providing the tech to them directly to do a good reporting on their activities and access carbon finance.
Great, short and sweet. Love it. Before we go on to other questions, does anyone in the audience have questions for these three about their project types? No. Awesome. You guys are so clear. Okay, nice. So I think one of the most interesting and exciting parts of working in the voluntary carbon market is the emergence and growth of new project types, new methodologies. So for example, forestry projects are tried and true, and they've been around for a little while, whereas capping oil wells, newer methodology, and that requires something called methodology development. Sam, you want to talk a little bit about that?
Yeah, that's right. I mean, we went upon it to actually create our own registry and develop our own methodologies. A lot of the traditional registries really are focused on reforestation projects, and that's great work, and the work you guys are doing are amazing. But if you look at really any of the charts where they show the wedge of here's what we need to do to decline greenhouse gases, and here's the small wedge that reforestation can effectuate change, it's a pretty small percentage, and it requires building forest about 10x the size of Texas. So there's still this huge gray wedge that needs to come about, and that's from actually reducing our footprint. And so how can you do that? Well, it's all heavy industry, right? That's where all emissions come from. Oil and gas is one of the biggest emitters in the world. And as you said, like, you know, it comes through, you know, any type of car, truck, any type of fuel, anytime you move, plastic cups. So you have to actually start reducing hydrocarbon use. And so the way to do that is to take real barrels off the market. And so what you're doing is paying operators to cut the tail of that production off. And when you do, they permanently get locked in the ground. So when people talk about permanence and they're talking about forestry, sure, that's 100 years. When I'm talking about permanence with what we're doing, it's hundreds of millions of years. So once that oil is in the ground, it's never coming back up. You also have a lot of side benefits as well, where, you know, you have a connection between the reservoir and the surface. You can contaminate groundwater. There's normally occurring radioactive material, hydrogen sulfide, benzene, all sorts of bad stuff. So we think that the traditional registries have been ignoring this, and it's really what Carbon Path we're trying to focus on, because we think that's going to be a key component of meeting the Paris Accord.
Can you take us really quickly through the steps of a project? So you identify an abandoned or an orphan well, and then what?
Yeah, so we do orphan and abandoned wells, but these are wells that are actually making money for producers. So say an example, we've just shut down 2 wells in Montana. They're each producing about 5 barrels a day. They would produce for decades longer, and they were going to sell those wells to a smaller operator, and that's just the life cycle of the oil and gas industry. Your costs exceed your revenues, you sell it to a smaller guy, they can operate it for decades longer. For example, a well that's producing 10 barrels a day, it'll take about 30 years to decline to 1 barrel a day, and it's still economic 1 barrel a day. So what you're doing is saying, hey, operator that has a 10 barrel a day well, don't sell it to mom and pop operator who we know is never going to properly plug and abandon it, but it's going to go onto that pile of 2 million orphan and abandoned wells. Pull forward that expense, and for a well, it can be really expensive, $100,000 to plug it. Forego the revenue you could get for selling that well to another company today, and we'll try to keep you pretty close to break even on that. So you're basically trading carbon credits for oil. The nice thing about what we're doing is there's a finite amount of oil in the world. So if you're taking some of the cheapest barrels off the market and you're keeping them permanently locked in the ground, because economically, oil would need to be $1,000 a barrel to even think about trying to re-drill and go access those reserves. So for the most part, you're never going to get them. So you're permanently taking supply off the market. And we think that's going to help more than anything the energy transition, because in order to transition, you're going to have to slowly shut down the oil and gas industry, right? If we're going to change to alternative fuels. And this is a very easy way of doing it. And the price point's really cheap. It's like anywhere from at 20 $100 a ton, you can shut down hundreds of thousands of wells. At 50, you can shut down 1 million.
Awesome, thank you. So what Sam's focus on is really interesting in the sense that it represents the whole part of the voluntary carbon market that's focused on non-forestry projects. We all talk about the voluntary carbon market and we focus a lot on forestry because by volume, it's a big and very visible part of the market and one that we all feel very passionately about, or I'm speaking for everyone. I feel very passionately about it. But there are all kinds of projects that have unbelievable impacts, both from a carbon standpoint and others that are non-nature based. And this is one of them. Cook stove projects, which I mentioned in an earlier project, are another where you're handing out clean cooking devices to often women and girls in the rural developing world. EV charging stations. This is really fascinating. It is not economically viable to build EV charging stations, even in the United States. And so you can get carbon credits purely for building EV charging stations. So it's doing lots of different kinds of activities that have an impact of reducing or removing carbon. These are carbon projects in the voluntary carbon market. But now we'll refocus on forestry because forestry is a much more tried and true category, but it's been beset by criticisms associated with the integrity of the underlying projects. Are they really doing what they say they're doing? And so these are two leading projects that are building technology to facilitate that. So Luis, can you talk about how Moss is helping solve that issue?
Yes. There are 4 phases of a project. First one is diligence. We need to check whether the land is owned by just one person and not 2 or 3, whether that land is that size that is really being said, whether there are indigenous people, living in the land and the owner shouldn't be there. So there are several important issues that are very difficult to, guarantee. And they are very manual. So what we did is we created this system, Moss Forest, where we, through data crawling on 16 different databases, we extract real-time information and all the time so that we don't waste time. As long as there's one inconsistency between one database and the other, we just stop, investing our time. We're only 70 people, out of which about 30 people are forest engineers. We have an office in São Paulo, an office in the Amazon. It's too cumbersome for us to work 6 months, 8 months, and then, discover in a paper-based data that this is not a good project. So first thing we did in the diligence side, we worked in the crawling of 16 databases. After that, there's the forest inventory that still we need people on the ground. Of course, we also are measuring samples of forest, but technologies are great nowadays of satellite imaging, so the price is going down every year. It's going to be amazing what we'll be able to do in real-time imaging already now, but every year is getting better. So we're really working on these 2 sides. Then there's audit and verification. Well, those we count on partners to use blockchain to help us leave the paper side, the PDFs that we see all the time, and put them on digitalization and blockchain. So you also asked about credibility. Currently, what we're looking at is all the projects are avoided planned deforestation. There's a law in Brazil that the landowner is allowed to deforest 20% of his land. The other 80% has to be intact. So we go and develop projects in that 20%. So there's no need of worrying with baselines, whether the statistical stats are good. We're just working on very certain deforestation possibilities. And we think that this is getting better. The registries are always working on enhancements, on better ways of calculating baselines. And they are also working with cushions, like we won't get all the credits of that area. They put aside about 20% or 30% of credits as cushions, so that in case the stats were not, did not come as expected, then we have that cushion to use and there's no overcrediting. So we don't have a problem of overcrediting in our area.
Which is huge. We could get into this, but I think we shouldn't. I'm tempted, but we're not going to. Getting into the subject of baselines, and which is, by the way, the Guardian article that criticizes Verra's REDD+, which is their conservation methodology, has been brought up at this summit a couple of times. And that's literally focuses exactly on this question of baseline setting in conservation projects. And so what Luis is saying is that Moss's projects don't have that issue for reasons that I'm not going to go into, even though I'm tempted to. It's because Fred, how is OFP innovating in basically introducing technology to enhance the credibility of the calculations used for forestry?
So the short answer is exactly what you said. No PDF. The longer version of the answer is making sure the data flow from the ground through the validation to the end buyer is, completely visible, transparent, and accessible. So that's kind of the longer version. I think, and I've had interesting discussions about people thinking, and that's relating to the topic now. And Jeff and I talked about methodologies on how to apply those kind of logic to other fields. And he's thinking about waste, which is awesome. How do you actually measure, capture the data from waste and make sure that all this data flow is legit and visible and transparent? It's not an easy task, not at all. And that's why also we need people we need those conversations. We need people to actually address those issues, because every issue is specific. What Moss does is very specific. What Carbon Path does is very specific. And I do believe that the Verra and Gold Standard of this world, they're doing an awesome job, but they're doing a lot of things. So they cannot be too specific, because they don't have eventually the resources to address those very, very specific points. So I think the more of us who can address very specific issues with very specific methodologies, we will be in a much better place, because with blockchain in the back end, it's going to be much more efficient.
Excellent. Okay. I think we have time for a couple of questions. Does anyone have a question? Go for it.
Yeah.
Okay, I'll repeat that. So I bought Moss credits a while back, and through the app you can do the function of retiring the chain, the credit after you buy it, the token. Yep. What I'm wondering is, in the registry, are they already retired in the registry when they're tokenized, or are they still live in the registry?
No, you can buy and hold and not retire. If you are not looking for compensation, if you're looking to buy and hold and then selling again, it's just like a security, just like an investment. But if you want to compensate your footprint, then you have to retire it. It's like burning it and not being able to make any money from it, because it's not an investment, it's a compensation. So you just need to choose what you want to do with it, and it will only retire if you want, if you do it.
Yeah.
Yes.
Yeah, that's what I was saying. I think, to your question, it probably still lives on, say, a Verra registry. So for NARS, that's why we are taking it completely out of Verra's hands. We have it on chain, and once you burn it on our website, it's gone forever. So you don't have to worry about it sitting on some guy's database and wherever. So it's all originates with us and gets retired with us. So that's a little thing that's a little bit harder working with the existing registries that don't want to put anything on blockchain, because you have almost like two parallel systems where we're eliminating that. There's one registry, it's on our chain, and that's it.
Anything else? Awesome. Okay. I guess we're so comprehensive. Wonderful. Well, thank you so much, Sam, Luis, Fred, for a fantastic panel. And we have our next fireside conversation to wrap up the day.